Hi, welcome to the Market Alerts for Friday, the 13th of October 2023. So an ominous day, and so was yesterday. We had abysmal auction and inflation angst, some stocks and bonds lower, dollar soars, prospect of further rate hikes. So the dovishness has disappeared to be replaced with hawkishness once more. Stocks, bonds and commodities hit while a dollar rips on a hot headline CPI and a dismal 30-year auction. Interesting that the bond auctions was abysmal as well. US stocks and bonds retreated after a firmer than expected headline inflation. So we'll see how that pans out through today. And we've just got central bankers today, apart from a couple of news items from the US economic ones, that is, at 3 p.m. So Bank of England, ECB, FOMC. So central bankers galore today speaking. It'll be interesting to see what tone they're going to bring it to the market, particularly Bailey, who's speaking first at 9 a.m. Right, let's have a look around the markets, and we'll kick off with the Dow and make our way to the metals. Just before we do, though, just to let you know, there will be no market alert on Monday, as I will be travelling. Normal service will resume on Tuesday morning. Okay, let's have a look at the Dow. We still remain blue, the market moving higher despite yesterday's reversal, which we see there. The market trading up to that 200 MA, still giving the market some grief here for sure, but looks like we're starting to move to the upside overnight. And there's the electronic for the Dow yesterday. This is the release of the inflation, which came out far worse than expected, which is unusual, and then the market declining once more. But overnight, again, you can see how it's already been discounted. All we need to do is get above the DP and then sail up to the high. The market's ignoring the war in the Middle East as ever. Actually bolstered by it, of course, for the contracts for the rebuild. That's the usual thing. Right, let's have a look at the DAX. So in the German DAX, also remaining green at the moment, traded up to the 50 EMA, but run into trouble there with the inflation numbers. Market above the 5 EMA as well, but off yesterday's, off the overnight high. If we just have a look there, which happens to be at the DP, watch the close and the low there. In the activity for yesterday, the market moving nicely to the upside, then was hit by the selling from the inflation numbers, which you can see there, down for the next 120 minutes or so, and then sideways, and then down once more, and all the way down to Wednesday's low there. Markets moved up off this. Like I say, we stuck at the DP and now sitting on the 20 bar moving average. The close is generally a good support, but the low's not too far off, which also includes the 200 MA there. In the S&P 500, again, situation where the 62% retracement is a resistance, as is the 50 EMA, but the 5 kicked in to lend support to move prices back to the upside. You can see that there with the market moving back, or trying to move back. In the 30-minute chart, prices are sideways. Then again, inflation numbers come out. Bit of a rally off this until we then get hammered down to the S2, taking out the low of Wednesday there. Market sideways overnight, needs to get back above the DP and the 50 EMA. And below for support, we've got the close, the psychological level, the big round number, and the 200 MA if we break any of those there. In the daily charts, the market trading up to 89% retracement, and then sideways to lower on the overnight. Interestingly enough, way above the 5 bar moving average for the FT100. So let's see if Bailey can ruin the party this morning. 30-minute chart for yesterday, once again up, then all the way down to Wednesday's low, and then overnight we're just, again, same as the S&P, sitting around the close and the DP, and the average is there where the market will need to find support. In the US dollar, well, as it said in the news, it ripped higher. It certainly did, but overnight it's starting to decline again at the moment. So maybe this is just a one-off event, and we'll see a resumption of weakness for the US dollar to the downside there. And finally, in the metals, we've got a down day for yesterday after the last few days up. Silver and gold being hammered to the downside on the release of the CPI numbers there, which you can see they're well and truly hammered after being sideways and supported. However, the market's regained over 50% of the move there at the moment and above the DP. So like I say, in that US dollar chart, maybe just the events of yesterday are just a blip, and it was a way of shaking people out so they can move the market back to the upside today. In the gold market, didn't turn red at all, found support at the 20 bar moving average. The 5 is just about to cross the 20 bar moving average as well, but doesn't look pretty in the 30-minute chart. Up in the morning, hammered to the downside, but again at least reclaiming 50% of this move, I would have thought. Yeah, bang on, well, between 52 and 62% retracement there. And finally, in the gold-silver ratio, bit of red overnight, green for yesterday, because obviously the slamming silver was greater than that of gold. But market finding a bit of support there in the gold-silver ratio. It shouldn't be finding support, it should be down and the narrowing of this ratio, but it's not. Okay, that's it for this one. It'll be interesting to see what the bankers have got to say today, and how the market's going to react. I suspect it's just going to move its way back to the upside and ignore everything from yesterday, as long as the war continues out in the Middle East. That's it for this one. I will see you in Tuesdays. Have a great weekend, and as ever, thanks for watching. See you in the next one.